The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is Zip. I should say we picked this one before the market opened, before the numbers started coming out, where we saw the buy now, pay later firm posting a full year loss of $449,000, which was an improvement on FY23's loss. Cash gross profit up 53% on the year to 373 mil. As of June 30, Zip had 6 million customers, down slightly on FY23. The company does not have a dividend policy. Kai, look, it's been a wild ride for Zip shareholders. I'm going to say, including myself, I stupidly got in at the top. Talk us through, though, what you think about this result and market reaction.
Yeah, absolutely. You know, as you were saying, it was one of the hottest stocks a couple of years ago, and it's at a pretty decent tumble. But in the last year or so, you know, they've restructured the business and it's actually doing fairly well. From the headline figures, you know, we are seeing that it's their first year in profit, so they've actually done really well. The EPS beat analyst expectations. But I think the devil is in the detail, and, you know, basically the stock sold off about 8% on the open. And the reason why was because, you know, they have a ANZ business as well as a US business. The US business is actually doing fairly well. The transaction volume is going up. But what we've seen is that the customer growth is actually slowing. So both in the Australia-New Zealand operation, they're not getting new customers. Their transaction value is getting bigger, and they're doing cost cutting. So, you know, the bottom line is bigger, but we're just not really seeing the growth that everyone wants to see. Do
you get a sense that Zip is sort of diverging in a way from some of the other players in this sector?
Yeah, I think, you know, they're well, it's kind of, you know, with Afterpay and stuff, they're all basically, you know, credit for later, right, without paying any interest down. They are acquiring some interesting other businesses to diversify a little bit, but yeah, I think in general it's hard to say that they offer something truly unique.
Francesco, what did you make of this one?
Yeah, look, I think if we go back probably into mid-2023, that that looked like they were destined for the scrap heap at one stage there, I thought. But they've come good. And as Kai mentioned, you know, they've restructured the business, started to turn around. We're starting to see some positives in cash flows. The balance sheet was improved, and that was one of the big restructuring processes, getting rid of some of those convertible notes. I think there's only about 60 million left in the convertible note side of things. So as they get rid of that, then the balance sheet will look a lot stronger. The revenue growth out of the US looks positive. Margins look like they're slightly improving. But where the price is at the moment, you know, it's probably looking like in the short term being fairly valued. So a little bit of weakness in the share price is probably not massive right over the last 12 months. Our analyst has got a buy recommendation on it, but that was prior to the announcement, so they'll probably be looking at the result. I would suspect that this short-term weakness in the share price might create some buying opportunities out there. If you asked me 12 months ago what I thought of the stock, or 18 months ago, I would have said steer clear of it. But when they started to restructure the business, I think, and then starting to see that growth out of the US market, because you've got to remember, you know, the growth in Australia and New Zealand is tapering off, but, you know, you've got critical mass saturation there. In the US, there's much more room for growth there for them, and then looking at other markets also. So I think there's opportunities there. I'd probably wait until the dust settled on this result before I start to have another look at buying more.
So is that a buy?
I'd be hold at the moment.
Hold?
Hold at the moment for me, yeah.
Yeah, I'd hold as well.
A double hold. What an
double
exciting
hold.
way to start the day.
Yeah, well, we got more to come though.
Okay, that is stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.